What is a stop loss, market order, and limit order, and how to use them? Everything you need to know to stay safe. Using these three trading functions and understanding the differences between them is a fundamental skill we need to learn to navigate the world of cryptocurrencies efficiently. They are available on virtually every exchange and constitute the foundation of the options available to us. I will now go to the Binance platform and discuss each of them. At the beginning, in the top line, you will find information about the currency pair I am currently using. Further in red, we will find a list of sales orders. In green, we will find a list of purchase orders. This moving list is the most recently completed orders. There are both sold and bought transactions here. Right above them, you will find a list of all cryptocurrencies available for trading divided into different pairs. For example, in relation to Bitcoin, separately to Binance Coin, to stablecoins and so on. In the very center of the screen, you will find trading options. The first of them is limit order. Using this option, you can place your sell or buy order by adding it to the list of those available on the left side that I mentioned earlier. For example, you can enter that you want to buy Bitcoin at a price of $40,000 per unit. Select what percentage of your account balance you want to use by entering it or using the slider, and press Buy, which will put your order on the waiting list. The sale works in exactly the same way. Once you have the cryptocurrency in your wallet, let's say you want to sell your BTC at a round price of $50,000 because, for instance, you've previously determined that this amount is satisfactory for you. And after pressing sell, the order will go to the waiting list. Remember that there is no guarantee that your order will be executed because whether it will ultimately take place depends on the price on the stock exchange and its changes over time. Our limit order will only be executed when the market price reaches the value you specified. In a situation where you want to buy Bitcoin, for example, at a price of $30,000, but the price doesn't drop to that value, your order will remain pending until it is either changed or cancelled. The same principle applies to selling. If you want to sell Bitcoin for $90,000 per unit, but the price doesn't reach that point, your position will remain open and the Bitcoins will continue waiting for sale in your portfolio. The second option is market trading. Using this function, we buy at the current stock price immediately. Our order is executed without waiting, and we also sell immediately at the current price without waiting. This option is intended for people who want to complete the transaction quickly. When executing an order of this type, it typically incurs slightly higher costs for us due to the so-called spread, which is the difference in price between the last selling order and the first buying order. In the case of Bitcoin, the market is very deep, so the spread is usually less than 0.1%, and the price difference doesn't really matter. This characteristic becomes significant for some altcoins and small exchanges where the spread often amounts to 0.5%, 1%, or more. If extreme cost savings are crucial, it's sometimes worthwhile to place a limit order and wait a moment instead of using a market order in a less liquid market. The last option is stop-loss orders. In other words, it is a conditional order, sell if or buy if. In what situations do we use this type of order? Let's assume that the price of a cryptocurrency is dropping, and we have certain concerns about its future price. Instead of waiting and observing what happens, we can set a conditional order, which will involve selling Bitcoin at a price of $40,000 per unit if its price drops to the level of $41,000. We can also act in the opposite direction. If the price is falling, we can enter that we want to buy Bitcoin at a price of $35,000 per unit if its price reaches $34,000. For orders of this type, avoid entering the same values in both windows because in a situation when the price drops or increases quickly, your order may reach the execution point, but may not be executed if the price changes too quickly. You should leave some difference in amounts in order to capture the so-called market liquidity. In a situation where the trigger for your order is set at $34,000 and the purchase price is $35,000 per unit, as in the example discussed when the order is triggered, if the Bitcoin price on the exchange is $34,000, your order will be executed exactly at that same amount. Entering $35,000 does not mean that's what you will pay because the order will be executed at the most favorable price. In the case of Bitcoin, a difference of $1,000 is a significant value, and the stop loss will work. However, on shallow markets where prices change rapidly, providing two similar amounts in the order can result in it not being executed. For example, let's say the price of a fictional cryptocurrency, ABC, is $40 per unit. We set a stop-loss sell order at $35 if the price drops to $36 per unit. In a scenario where someone sells a large number of units of the coin simultaneously on a shallow market, the price can change from $40 to $30 within a second. This would trigger our stop loss, and our sell order would appear on the list at $35 per unit but won't be executed because the current price is $30, and there's no one to fulfill our order at $35 per unit. Understanding the characteristics of the three types of orders discussed, you can decide which one is the best solution for you in a given situation and which function to use. If you still don't feel confident and have doubts while entering amounts, try setting orders with a value of a few dollars to familiarize yourself with all the features. Canceling such an order is possible at any time and is free unless it has been executed. Remember that a turnover fee is charged for each transaction, which, in the case of Binance, is 0.1% of the transaction value. Below you will find current orders and a list of already completed ones. There are additional functions such as cross, isolated, and grid, but due to their nature, I will deal with them in another material. Over time, you will gain experience and skills that will make using functions like stop loss, limit, and market orders easy, enjoyable, and hassle-free. Remember that the stock exchange is a private company that can sometimes have its ups and downs, so it is not recommended to keep your funds on the stock exchange. The best solution is to keep cryptocurrencies on external wallets, such as Ledger or Trezor, which I mentioned in previous videos. If you want to build your cryptocurrency future, keep your cryptocurrencies safe and send them to exchanges only if you want to make a transaction. At the end, if you are looking for a complete cryptocurrency training, check out my crypto guide on Udemy. The link is below this video. If you like my material, please leave a thumbs up. If you have any questions, ask them in the comments. Good luck!